You have to be prepared for everything. If you have not studied currency life cycles, you wouldn't know all of this. And there are many people that do not think that we are going into hyperinflation. You tell me how we can avoid it. If all they can do is grow more debt, can you sit there and tell me that if you continue to just grow debt, never pay it off, not even pay all the interest on it, can you do that forever? Particularly when your income does not keep pace with the level of debt that you're growing? The answer would be no. And what if you lose some of your income? Well, guess what? You are a debt slave, and you will have to do whatever it is that the powers that be tell you to do. I don't want that for anybody. I don't want that for anybody. How many times can you be lied to when you do not know the truth? I'm trying to show you the truth. I know it's complicated, but you know what, too? We have a whole team of really smart and talented people that can walk you through this maybe more slowly or on an individual basis, be able to figure out how to explain it to you so that you can understand it. Because this stuff is intentionally made complex so that you don't even try. But you can't afford not to try. And you can't afford not to see what I'm trying to show you. Because things are speeding up. I feel like I'm on a flippin' freight train. So yeah, clearly what happened at the IMF freaked me out. Historic level of IMF SDR creations. The beginning of the year. 13 trillion debt bill comes due for big economies. This debt bubble is bursting. So they keep pumping it up by creating more debt and the central banks buying it. That's monetization of the debt. I don't care what name you give it. But there's your crossover between governments and central banks. Are they independent? I don't think so. I don't think so at all. And what happened in February? Oh, SLV changed their prospectus. Price can be unrelated to silver in midnight prospectus change. Yeah, they did that really quietly too. So you can't pull together a basket of physical silver for SLV. Because the paper markets control the markets. While the central banks, while smart people that are paying attention are buying freaking physical silver and gold. I'm not selling my silver and gold into the market. Once it comes off the market, it's off the market. I'm holding it. Look at the spot silver. I think it was like 23 bucks. I mean, please. Honestly, it's a joke with the level of leverage that are in these markets that we don't even know about, quite honestly. But I can tell you, not one little doubt in my mind, this indicates that the wheels are coming off the bus in a big way and they're trying to get ahead of it. But the central banks, I mean, you hear these people, they'll just raise the rates. We have the tools, we'll just raise the rates. Because when you have enough ramp room to lower rates, 5.5%, 5.75%, which is what they did into every crisis, well, what? Lower rates inspires buyers buying and borrowing and spending. Raising the rates reduces borrowing and spending. They can't raise these rates. There is too much debt on the books, and they are anchored at zero. 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 So when they talk about the Fed getting behind the 8 ball, it's garbage. He's not behind the 8 ball. He's between a rock and a hard place that is getting more and more and more and more narrow. They can't do it. They can't do it. They've used up all their tools. I don't care what they say, because all they have are interest rates and debt levels and growing more debt and creating more dollars, which devalues every single dollar that's out there. So those that have the wherewithal and that the 1%, they own a whole bunch of stocks and it pushes the stocks up, so they think that balances out. Yeah, tell them that in Zimbabwe. Tell them that in Venezuela. Tell them that in all other countries that have experienced hyperinflation. Tell them that in 1929, for God's sakes, in the U.S. Traders debate what may happen next. I'll tell you what, with this, I have full global demand. With this too, right? Every single area of the global economy uses physical gold and silver, not spot gold or silver. So the jobs report came out a little bit better. Oh, okay. So that means that the central bank is going to raise the rates to fight the inflation? No, they won't. Mark my words on that. I'm putting my neck on the line. If they do raise them a little bit, they will be lowering them quickly thereafter. This market, the fiat market, is a house of cards. It is so vulnerable. They cannot afford even you saw what happened when they raised the rates. What was it, even a quarter point? It was ridiculous just a little while ago. I did a whole thing on it. So no, they're not going to raise the rates to fight inflation, because they're creating this inflation. And it is not transitory. It is permanent. And I am now, after seeing this, where I was saying, we could have started in the hyperinflation, but I'm not really sure yet, because I'm not seeing that movement in the velocity of money. And maybe I shouldn't say it, and I'm probably going to hear about it from saying this. But yeah, after I saw the central bank or the IMF move with all of those SDRs, and I'm watching everything else that's going on with the central banks, I hate to say this, but I think we are ramping up for it to get really, really noticeable. If you don't have a plan in place, get one in place now. And, it's an awful lot to do: food, water, energy, security, barterability, wealth preservation, community, and shelter. But how do you eat an elephant? One bite at a time. So no matter what you do, get that plan in place, and then you execute it as you can. But you will be in a much, much, much better position if you do that than if you just go, well, it's too much, I can't do all of it. I know you can't do all of it. I've been working on it for a long time personally. I know you can't, but you can do something, and something is better than nothing.